Yeah. So we are about to start. If you could just turn off your video and audio.
Philip, I'm not able to record. I need permission from you.
Okay, I'm recording it. Okay, so we are about to start. If you could just turn off your video and audio. And also we will be recording this session. So we just wanted to make sure that you're aware of it. So hello everyone and welcome to SpecterCast, the monthly podcast series of the Ireland Specter Center at Thomas Jefferson University in Philadelphia. This is a podcast where experts talk to experts on various matters of general and topical interest. I'm Philip Russel. I'm Professor of Finance and also the Dean of School of Business at Canberra College of Design, Engineering and Commerce. And I will also be the host for today's podcast. So this is episode number 4 of SpecterCast. And today we're going to talk about an important topic, and we have titled it Fading Financials, Money Matters Amidst the COVID-19 Pandemic. So today we are delighted to have with us my friend and colleague, Professor D.K. Malhotra. He holds the prestigious Neidig Family Chair, and he's also a Professor of Finance at the School of Business. So DK, welcome to the podcast, and thank you for taking time to join us. I hope you and your family are doing well. So how was your summer? And I'm sure you used the lockdown period to unlock some more research. I know you have a big research profile. And I see that you got a haircut too, which is nice. So you're ready for fall semester, I guess.
Yeah. Thank you, Philip. Thank you very much for the invitation, and thank you for the opportunity to talk about this very important event that is happening and that is impacting the entire globe. It has been pretty unusually busy summer with many students and curriculum-related issues, as you're aware of it, that we had to tackle in preparation for the fall semester. But at the same time, was able to get some research done. I mean, I was able to unlock some research projects.
Well, I'm not surprised that DK got some research done. DK is actually a very prolific researcher, and he has published nearly 150 research articles on a wide range of topics, including personal finance, investments, bankruptcy prediction, market efficiency, international finance, and so on. His research has also been cited by SEC, which is Securities and Exchange Commission. They are the watchdog for publicly traded companies, and also by the Fed, which is the central bank of US. And he has also been quoted by the popular press like the New York Times. And he currently serves as the editor-in-chief for Afro-Asian Journal of Finance and Accounting. And he also serves on the editorial board of many other journals. So we are truly delighted that he is able to join us today and share with us his insights on what's going on. So one of the immediate effects of COVID-19 has, of course, been the tragic health effects, but we've also seen damaging economic and financial effects on individuals and businesses. And today, that is what we want to focus on very briefly. We want to touch upon the global impact of the COVID-19 from an economic perspective, and also evaluate some of the policies that have been put into play to mitigate the crisis. And also of interest to many is the trade-off between personal health and economic wealth. And I also think it's very interesting, some of the seemingly anomalous disconnect that we see between Wall Street and Main Street. And finally, I hope we'll have some time to draw some advice for investors and also look at some opportunities that this crisis presents. So DK, those are some of the things that I have in mind, and hopefully we can cover that within the time that we have. So why don't we just start with maybe you can give us a quick snapshot of how COVID-19 has impacted the US economy and indeed economies around the world.
Sure, Philip. COVID-19 is a black swan event, which no one saw it coming. That's why it was called first black swan event that has spread at an unprecedented scale, infecting millions, bringing economic activity to a halt, as countries around the globe, they imposed tight restrictions on the movement to control the spread of virus. So with the economic shutdowns across the globe, economic activity came to a grinding halt, and gross domestic product, which is a measure of the economic output within a country, its growth rate was negatively impacted across the globe. According to World Bank, one estimate is that the gross domestic product of the global economy, it will actually go down by more than 5% this year, 2020, because of COVID-19.
Yeah.
In terms of its impact on the US economy, the gross domestic product in the second quarter, it went down by more than 9%, mainly because we all know that we were all on lockdown. Consumers cut back on spending, businesses scaled back their investments, and the global trade dried up. If you want to look at it, the size of the cake on an annualized basis, it basically is going to go down by about close to 33% annualized basis. When the size of the cake declines, obviously, that means we have less income on a per capita basis also. And there is going to be decline in personal consumption. There is also the decline in the overall spending. The impact on emerging markets and developing economies is going to be even more severe. And the poorest of the poor, they are the one who are going to face and who are already facing a higher brunt of the crisis. And the global economy is in deep recession. Advanced economies, they will shrink by about 7%. But even the other economies, they are going to go down also in a big way. And that's going to be a major, major problem for the globe.
Yeah. So this sounds like a true global financial tsunami, so to speak. And in the interest of time, maybe we can just stick to the US conditions. And I feel that the economic crisis such as this can perhaps be framed as a cash flow crisis with a mismatch between the revenue and the expenses. It's obvious that the crisis has led to shortfalls in the earnings, but many of the bills are non-discretionary and they still have to be paid. For example, if I'm running a coffee shop, then obviously the earnings are down, but I still have to pay the rent to the landlord. And obviously, if such cash flow mismatch continues for a long time, it can easily bankrupt companies and it can accelerate the recession. So I'm thinking about what are some solutions that we have, or in the past, the Fed has come up with some monetary policy tools and the government has come up with some fiscal solutions. And so I was wondering if you can touch upon those and see what policy tools we have put into play to mitigate this crisis. And in your opinion, whether they were timed well and whether they will be effective in the short run and maybe also in the long run.
Certainly, Philip. The pandemic, it has presented several challenges to businesses, and the impact on businesses has not been very even. Some businesses have been impacted more negatively in comparison to others. So if you're looking at businesses in the hospitality industry, for instance, they are reporting a significant decline in revenues. I mean, Disney is reporting significant decline. Universal Studios is reporting significant decline. Airline industry has been pretty hard hit because of the pandemic. The hotel industry, entertainment industry, any service industry has been pretty hard hit. Even the tech sector is hit. The main thing is that there are some big five who have benefited from it on that particular part. So there are cash flow challenges, as you already mentioned, on that part with regard to the pandemic for the businesses. Now, what help is being made available to them, and what is being done from that particular viewpoint? The main thing is that the Fed has cut the rate of interest. I mean, the federal funds rate, which is the rate of interest that banks charge other banks for lending to them, the excess cash from their reserve balances on an overnight basis, that has been brought down significantly within the range of about 0 to 0.25%. And this is the benchmark, which is affecting other interest rates and longer term rates. So this is lowering the cost of borrowing. Cost of borrowing is being lowered for the businesses. Cost of borrowing is lowered for mortgages, auto loans, home equity loans. That is the main thing. But it will also cut on the interest income for the savers also.
Mm.
At the same time, what the central bank is doing is, what the Fed is doing is that they are making sure that credit is available. There is no credit crisis in the market, so there is credit available in the market. So they are making the credit market liquid by making money available to those companies, those companies that need it, or those companies that engage in lending at a low cost on that particular part. So those steps have been taken in terms of helping on the monetary side. On the fiscal side also, there has been a response from the government, because Federal Reserve is responsible on the monetary side, but on the fiscal side, the government injected $2 trillion of support for the businesses, as well as in the form of checks to the households, so that money is available and their businesses do not suffer because of lack of liquidity, because they have bills to meet, as you already mentioned that.
Yeah.
They have bills to meet. So they rolled out the payroll protection program from that particular viewpoint.
Okay, so the focus seems to be on making sure that there is no liquidity crisis like we had in 2007.
Yes, 2008, 2009 crisis. Yeah.
So as a follow-up, some people would argue that we should not really bail out the big companies like maybe GM, Chrysler, Citibank, and so on, like we did during the earlier crisis. So what is the connection between bailing out big companies and how it impacts the small and medium businesses? And why does bailing out big companies may actually make economic sense? Or maybe it doesn't. You are the expert, so what is your take on that? Why should we bail out the bigger companies?
This argument was also made during the 2008, 2009 economic crisis also. Main thing that everyone needs to understand is that, yes, small and medium enterprises, they do create jobs. Small and medium enterprises, they provide the lifeline for an economy. But at the same time, the bigger companies, they actually help in creating the supply chain. So the reason why we step in to bail out some of the bigger companies is because ultimately jobs will be generated in the form of the supply chain that supplies to bigger companies. For instance, in the 2008, 2009 economic crisis, General Motors almost went bankrupt. You all know that they almost went bankrupt. So the US government stepped in by providing them the money and by buying their dividend paying stock. And there was a lot of criticism. The fact of the matter is that US government was not bailing out General Motors. US government was bailing out 1,500 auto parts suppliers who were suppliers to GM. If GM had gone down, all those companies, 1,500 companies, would have been at risk on that part. Similarly, Citibank was bailed out at that point in time. And once again, the reason they bailed out Citibank was that because they were the largest lender to small businesses. Mm-hmm. So there is a link between these companies, because these companies actually help mushroom the supply chain, and those supply chain companies, they create the jobs. So without the help, I mean, many of these may go bankrupt. I mean, 26 to 30% are at risk to go bankrupt on that particular part. So that's why bailing out makes sense from that particular viewpoint.
Yeah, thanks, DK. And oftentimes we don't hear that in the popular press, because the headlines are usually that the big guys are getting all the money and the small guys are being left out. And just to shift gears a little bit, I know the 2007 crisis was focused on Wall Street, and the current crisis is more on the Main Street. So there seems to be a disconnect between Wall Street and Main Street right now. So we see that the economy seems to be in trouble with high unemployment. Even today, we saw the statistics that the unemployment was very high. But the Wall Street is setting new records every day. Indeed, it has gone up nearly 50% since the dip in March. And I know that both of us believe in the efficiency of stock market in terms of pricing the information and being a leading indicator of the economy. But there seems to be some kind of disconnect in terms of how the prices are being set on Wall Street and what's happening in the Main Street. So do you think there is some kind of anomaly, and how would you untangle that? Unemployment is high, there is no vaccine, the shopping malls are empty, but the stock market continues to surge ahead. So how do you explain that to an average person? Yes.
Yes, it's true that is a question that is being talked about in popular press also. That is a question that has been addressed by many other economists also, what's going on with the Main Street and the Wall Street. Keep in mind that Wall Street is driven by the Main Street, and at the same time, Wall Street can be a predictor of the Main Street coming in the future. Economy is not doing well, and the stock market is rising to new highs. And also, when the pandemic first started in March, April, there was a crash in the stock market in a big way at that point in time. I mean, there was complete panic. As governments, as market realize that governments are trying to get a handle over this pandemic, or at least they are working in the right direction. So there are several reasons now for the stock market rising. One is that stock market is factoring the recovery. Market participants, they expect that vaccine is around the corner and there will be economic recovery and the US economy will be back on track. So are they over factoring it? That particular part, maybe they may be over factoring it, but ultimately everybody knows that economies around the globe, they are working on vaccine and there will be a vaccine available sooner or later. There is a second variable which is at play, and which is that the stock market indices, they are driven by large companies and they are weighted in favor of them, and these companies are doing very well. Mm-hmm. I mean, if you look at the Dow Jones Industrial Average, Apple is a component of the Dow Jones Industrial Average, and Apple has today a market capitalization of $2 trillion. So a $1 increase in the price of Apple, it causes the Dow Jones Industrial Average to move in a much bigger way. So that is also causing the stock indices to move on the higher side. It is also opening up new opportunities for many companies, and they are experiencing the growth in the market. Yeah. Keep in mind, every stock is not doing that great. So it's some of the stocks that are doing well on that market. Another variable which is there is due to cheap money which is available, because interest rates had to be cut down to almost zero, and the discount window, which is the Fed giving money to the bank, it has been also brought down to zero. Many companies are buying back their own shares. In fact, some companies are borrowing money by issuing bonds, and they are buying back their own shares because it's cheap money available, and that is also causing the stock market to go up. And also at the end, rise in stock prices may be an indicator of the future economic growth. I mean, there is going to be a rebound because this is just a pandemic that is causing it. There is no structural flaw in the economy.
Yeah, so I don't think there's anything wrong with our companies as such. So this seems like a short-term disruption, and maybe the market is really pricing the recovery, which may take place in 6 months or in a year. So there is nothing fundamentally wrong with the companies. So there is no reason for the markets to crash and keep going down. So thanks, DK, that seems to make sense. I also wanted to talk a little bit about the ongoing debate about the so-called trade-off between personal health and economic wealth. So that is, we need to take some kind of calculated risk to show up to work if you're going to save the economy. So I know it's a little bit controversial, and I have the privilege of putting you on hotspots. So I would like to see what your opinion is on the trade-off between health and wealth, or if there is really a trade-off, because we often say health is wealth, but yeah.
There is a debate, obviously. There is a debate between public health and economic wealth, but keep in mind that healthy population is what will give you healthy economic growth. Because if public health is not taken care of, then economic wealth or strong economic recovery, I'm not so sure how much it is possible. Because ultimately healthy workers, they are the one which have higher productivity. And higher productivity means higher gross domestic product. That means higher output, which means the size of the cake within the economy will grow bigger. If the size of the cake is bigger, obviously personal incomes will rise. And if personal incomes go up, it will drive consumer spending, it will drive government spending, and it will drive more economic growth on that point in time. Without public health, if workers are sick, I do not think, personally in my view, I do not think that it can contribute to economic health. Both of us are originally from India, and I can give you an example there, because during the month of July monsoon season, there are viruses in India. So a lot of people get sick and they take time off from work. If you're sick, you have to take time off from work, or even if you are at work, you will not be able to perform productively. So a study was done that if we can control the viruses during this monsoon season so that people are healthy,
Mhm.
The gross domestic product of India can go up by more than 2%. They were already growing at 8%. It will add extra 2%. This
Mhm.
is the reason why we invest in healthcare. This is the reason why the debate about healthcare becomes important on that particular part. If people are healthy, we are very well developed country. United States is a very well developed. We are the wealthiest nation on earth. So if this is the reason we are wealthiest nation on earth, is mainly because we do worry about public health on that part. So there is, I mean, we should not even think about in terms of the trade-off,
Mhm.
but it's unfortunate that we had to face a situation like this where the pandemic we forced us to shut down the economies. And it's
Yeah.
not just us. Around the globe, you look at New Zealand, you look at Germany, you look at France, you look at South Korea, China, all of them, they had to shut down the economies because public health comes first on that part. So yeah, there may be some trade-off beyond a point, but I think public health does drive economic wealth.
Yes, in the long term, it does make sense to focus more on public health rather than the economic argument. So we know that any kind of crisis always creates some opportunities for success. So what do you think are some of the short-term and long-term opportunities that this crisis presents to the business world and maybe even for higher education? And if you're a leader, would you recommend that we invest strategically for the future, or should we remain focused on managing the short-term crisis and the short-term disruption? It's like, even if you look around campus, we see lots of buildings, and what does the future look like with all these big buildings if everything is going to move online or parts of it are going to move online?
Every crisis, it does present a opportunity. I mean, it forces us to think innovatively. It forces us to become more resilient. I mentioned to you the example of the KFC founder, Colonel, who always used to have on the back of his wall, opportunity nowhere. And somebody walks into his office and says, Colonel, what do you have on the wall? Opportunity nowhere. He says, where? He says, right on the back of your wall. And he said, no, I don't read it. He says, what do you read? He says, I read it, opportunity now here. So this pandemic also, I know that when we look at a lot of unemployment, when we look at the problems that we are facing in terms of public health, in terms of economic health, there seems like it's like doomsday. But it does present to us an opportunity. And the opportunity is now that this is the time to focus on innovation. Those businesses or those business models are succeeding, which have been sensitized to digitization. Can we reconfigure, can we tweak our business model so that it becomes sensitized to digitization, and we will be doing very, very well? I mean, companies like Amazon, companies like Walmart or Target or others. Yes, Amazon is online. Most of the business model was online. I mean, that was the original business model through which Jeff Bezos started. But Walmart was a late player entry into the e-commerce mode. Target, and recent earnings report that came out, they said that they are doing well because of their e-commerce model, digital approach to business. So businesses have this as an opportunity to invest in the digital technologies, because now with 5G available, this is going to be a big opportunity, not just the businesses, but even from the education viewpoint. Do you think the online teaching is going to go away once we have the vaccine and we can go back to the classroom? I think students will demand it.
Yeah.
And I think this is an opportunity for us also, that we can save on the commute time and we can invest that time in our research projects. I mean, if I can save every day 2 hours of commute time, I mean, that's an extra, imagine on 7-day week, it's like, or even a 5-day week, it's 10 hours.
Yeah.
We can devote that time to research. We can use that time very productively on that particular part. So digitization is here to stay on that particular part. So invest in innovation. Second thing that is very critical is invest in sustainable business model, sustainable growth. I mean, up till now, we only talked about it, and the accrediting bodies also talk about it. They mention that how much serious effort has been made towards sustainable growth. We should not be moving away from it. Climate change is a reality. And in fact, I'm not so sure, it's not my theory, but there is a theory out in the market that It is because of climate change that the bats were disrupted out of their natural habitat, and this virus kind of spread because they came into contact with human beings and the virus jumped from. I'm not a scientist, I'm an economist on that part. So there are two areas in which there can be a lot of opportunity for growth. One is the digitization and adopting it, embracing it in the true sense of the term, and sustainable business model.
Yeah. Yeah, I think many of us are getting used to online shopping and also getting our groceries delivered at home. I think those are great conveniences and we're getting used to it. And we're also able to strike a balance between working from home and also coming to campus. So today, actually, I'm on campus, but so yeah, you're right. So there would be some creative solutions and we need to see how we can use this crisis as an opportunity to improve what we are doing, to see how we can come up with new business models so that we can continue to be in business, whether we are in higher ed or whether we are in business. So if we don't change anything, then we'll probably disappear, right?
One more comment I can add is
Yes.
the consumer also, like you mentioned that we were not, some of us were not used to shopping online, specifically when it came to groceries and things like that.
Yes.
But now even we as consumer have become digitally sensitized. That means that we will be shopping online more, and it's just, there's no going back on that particular part. So that has to be now become part of the business model.
Yeah, e-commerce is still a very small part of the retail experience. So I'm sure there's a big growth opportunity there. And the same thing with online education, which is still a very small part of the overall education. So again, there might be a huge growth opportunity here. So I have a question on personal finance. We know that markets are very volatile and the markets kind of went down in March. And obviously it creates a lot of fear in people. They don't want to invest in the markets, whether it's the stock market or the bond market. So what kind of advice can you give such people, or how can they overcome their fear? Or what would be a rational reason to stay invested in the stock market? And I'm sure you got many calls in March from your friends, whether they should bail out and run, or whether they should stay the course. Or even for a new investor, how can they overcome that fear of investing in markets?
I'm not surprised that people are worried about personal finance. People are worried about their financial well-being given what's going on in the market. The worst time to sell is when the market has gone down.
Yes.
You have already booked your losses. So when you're selling it, you are only realizing your losses. Otherwise, it is unrealized loss sitting on your in the books only. So this is not the first time that the market has gone down. Markets went down in the year 2000 when the technology meltdown happened. Markets went down in March of 2009 when there was economic crisis, what they call this crisis of the century, which was started with the liquidity crisis. And again, markets went down this March because of the pandemic. So the worst time to sell is when the markets are down, because it will ultimately come back up. So there is no, you should never try to sell it in a down market. You should remain invested in the market. That is a long-term viewpoint on that part. Having said that, as an individual investor, you should not try to time the market. It is very risky for timing the market viewpoint that right now the market is down and I should buy it and the market will go up and I should sell it. That is, from an individual investor viewpoint, you should always practice what we recommend, dollar cost averaging, which means that try to invest every month a amount of money in different stocks. Some of these stocks you will buy cheaper, some of them will be expensive. At the end of the day, it averages out, and over a longer period of time, you will see that you have accumulated wealth, because some of these stocks will go up with a diversified portfolio and they will make up for the loss on some other stock that went down in the market. So always have a diversified portfolio. Always try to, if you're a new investor, always try to look for the blue chip stocks. Do not try to shop for penny stocks. Penny stocks are those which are trading below $5. 80% of the time, penny stocks, they go bankrupt. So do not try to go for get rich schemes because there is no such thing as free lunch in the market. And ultimately, you will see that your money will work for you. Your wealth will grow for you. If you have withdrawn the money from the bank and put it under the bed, the money is not working for you. You are working for the money.
Mhm.
Even if you have bought pieces of gold and put it in the home, it's not working for you. You can rather invest in gold bonds on that particular
Yeah.
viewpoint. So
Yeah.
stock market volatility is a variable that is of crucial importance, and keep in mind, have faith, do not sell when it is down.
Yeah, thanks, DK. That's good advice. And we always have to learn from history in life, whether it's in the markets or anywhere else. So we need to look at the past and see that the patterns seem to continue every few years. So we just need to stay the course. And as DK was saying, I think dollar cost averaging or index fund investing seems to make a lot of sense. Finally, DK, we have some students in our audience, and many of them were disappointed that we switched from on-campus to online learning. So why do you think this disruption might actually be a blessing in disguise for our students as they enter the workforce in the near future? It could be next year or in a couple of years. So why is this experience a good one for them?
Well, both of us teach in the business school,
Yeah.
and in the business school, we always talk about change management. We always talk about flexibility. We always talk about adaptability. So we only talked about it. We never experienced it. And now we are actually delivering an actual experience to the students. So they very quickly in the middle of March, like literally when we were about to go for spring break, we were
Yeah.
told that we are shutting down, we have to move online. So that is change management. So business students or any other student should know now, life does not go according to a plan and business will not go according to a plan. So if there is a black swan moment comes in, what is the lesson that you learned? How quickly we moved on to an online format? I would say that with almost perfection.
Yeah.
I did not come across a single situation where people said that, oh, this is not working. Yeah, for 1 week, we had some issues, but we worked with everybody and we all grew wiser.
Mm-hmm.
So students are getting actually a real life case study of how to respond to change, how to respond to a crisis.
Mm-hmm.
And this is being done for this, and they can become a key, they are becoming a key player in this when they look around the globe. And this is not a crisis, this is an opportunity for them, a great internship opportunity for them. They always look for internship. Here is an internship opportunity for them on that particular viewpoint. And they are also getting ready for the world of tomorrow as to how the world will look like, how the businesses will retweak their business model. And a lot of disruption is happening in the market. So they should be able to notice that what kind of skill set will be needed, what kind of skill set will be demanded of them by the employers on that particular part. So I see more
Yeah.
as an opportunity, as a educational experience rather than as we are moving online to Zoom. Yes, everybody is learning in this part.
Yeah, I'm sure if you walk into an interview tomorrow and say you don't know how to use Zoom, you're not going to get that job. So I think these are real life skills that we need to acquire. So instead of looking at it as a negative, we need to see what are some skill sets that we can develop and be ready for the real world.
And how the world came with innovative solutions, like in some of the areas, low income areas where the students didn't have internet, school districts actually, they sent their school buses with mobile internet hotspots on them in those areas so that kids can connect and actually learn on that part. It is mind boggling how it drove human innovation.
So DK, we are getting close to the finish, and I know elections are on our mind. And I'm sure you've been watching the convention, Democratic or Republican convention. So I'm not going to ask you to predict the winner, even though that might be interesting, or I'm not going to ask you to talk about US Postal Service or the foreign meddling in our elections, although those things might be very interesting and also very controversial. But what do you think would be the top 2 or 3 priorities, no matter which president enters the office? Because I'm sure the crisis would still be present in November 2020. And even when they take the office in January, they're not going to get a perfect economy. So they'll have to play a major leadership role at that point. So what should be their top 2 or 3 priorities?
I'm sure election is on the mind of everybody, and unfortunately, everybody is looking at it from those glasses of elections. Which it should not be. Whosoever assumes office on 20th of January, if President Donald Trump re-wins the election, or if Joe Biden comes back into the office again, for him also it's kind of coming back to the White House again. Both of them going to inherit at the minimum two very important crises. One is public health, and the second one is the economy.
Yeah.
Public health pandemic, it is still raging, and if we believe the prediction, if we believe the science, when the flu season starts in October, we are going to have a second wave. The only problem is we are not yet out of the first wave on that particular part. And the economic pain that it has inflicted, I mean, a lot of people, real people, are suffering because of the pain that it has initiated for them. So anybody who comes to office, they will have at the minimum two jobs. How do we now address public health issue, and how do we address economic recovery? Because public health issue is critical from the viewpoint of building people's confidence back into the government, back into the economy on that particular part, that okay, there is no more public health crisis, I won't get sick, and I can easily go out and shop, I can easily go to my workplace, won't get infected, so I can focus on the job. That is crucial. So there has to be a task force created for public health.
Yeah.
And at the same time, simultaneously, working parallel almost, there has to be a task force which will address economic recovery.
Yeah.
Because the sooner we recover, the better it will be. I mean, it's like when I die, that's my doomsday. Anybody who doesn't have a job, for them, it is apocalypse now. I mean, anybody who has a job, we should consider ourselves very lucky. The pain is real. The pain specifically for those who are like have an income of below 40,000 is even much worse on that particular part. So task force has to be created to address the economic recovery. How do you lower the pain? Through another set of stimulus package, making sure that we do jumpstart the economy by passing another American Recovery Act on that particular part. So these two task force you will see very easily: pandemic, how to address that, and economic recovery task force.
Yeah, I think those are two very good priorities that our leadership team should have going forward. So I fully agree with that. So DK, this has been very, very interesting, but unfortunately we are running out of time. So we don't know what the future holds, but one thing we know for sure is that the pandemic is going to end, and our health and the economies will recover very soon. So that's something that we can look forward to. So DK, thank you again for joining us.
Thank you.
Thank
you for the opportunity.
Do you have any advice for the Dean of School of Business? No, just kidding. No. So thanks for joining us today, and we hope you enjoyed the time with our expert, DK Malhotra, and I hope you can join us again at the next podcast, which will be in about a month. So thank you very much. Bye.
Thanks.